Hi guys, I'm Dan, this is Kai, we're the directors at Crescent Mortgages, and today we're bringing you a beginner's guide to remortgaging in 2023. So we did make a kind of a beginner's guide to mortgages in general recently. This is specifically tailored to remortgages. So if you just want to know what a remortgage is, a lot of people don't know if they've never had a mortgage, or if you're approaching your first remortgage or you're going to need to do that in the next year or two, then we're going to jump into the absolute basics and kind of give you some really useful information to take into that first remortgage. Obviously, if you have any questions, you can contact us as well. Just to touch on, as always, we're not YouTubers, we are mortgage brokers, so we can assist you with your mortgage, we can give you advice, it's completely fee-free. So if you have any questions about your specific circumstances, just get in touch. You can call us, email us, or head over to the website. Let's jump into it. Okay, what's a remortgage?
What is a remortgage? So
It's a hard one.
It's hard, you think, to explain in basic terms.
Do you want me to do it?
Well, go on then, yeah. If you got one,
what are you doing?
I was just
What are you doing here?
Smiling at the camera.
Looking pretty. In the context that we're discussing this, a remortgage is when your initial mortgage scheme, so when you first take out a mortgage, you will normally commit to a scheme, let's say a 2-year fix or a 5-year fix. When that scheme comes to an end, if you don't do anything, you will lapse onto generally a much higher rate, which we never really want you to do. So instead of lapsing onto that higher rate, you'll shop around and move on to a new scheme, the most competitive that we can find at the time. It could be another 2-year fix, another 5-year fix, it could be a 2-year tracker, a 2-year variable, whatever it is. And you'll generally do that every few years throughout your mortgage term, which could be 25, 30, 35 years. So that's a remortgage, isn't it?
Yeah.
In terms of where they go at the end of the scheme, so I guess there's 2 options really, aren't there?
Yeah.
Do you know?
I'm not sure where you're going.
Do you know where I'm going with it?
No. Give me the first one, I'll give the second one.
Okay, the first one is you can remortgage to a new lender.
Okay, there we go.
Yeah?
Now I'm with you.
Yeah.
Go on.
So a full remortgage where so let's say your mortgage is currently with Halifax, you're coming to the end of the scheme, you contact us, we can help you, or do it yourself. We shop around and suggest that actually moving forwards, NatWest have the best mortgage for you. They've got the most competitive rate that you're eligible for. So we do a full remortgage over to the new lender. And most of this video will be referring to this situation where you move to a new lender. That process we'll jump into in a second. There's a kind of a little bit of work and assessment that will go into it. But that's option number 1. The second option, which brokers can also help you with.
Option number 2 is to find a new product through your current lender. So your existing lender will often offer
in this scenario, Halifax.
In this scenario, Halifax, yeah.
Other lenders are available.
Which, such as NatWest, you just mentioned.
Yeah, and the rest.
But yeah, your existing lender will offer you a product, and that, I suppose the process that we could probably explain on that one is relatively straightforward. It's kind of picking a product and it will just go on to that at the end. Generally, there's no real process to follow, is there? It's a very, very limited set
It's easier. It is easier, and we'll explain why in a second when you see the work that has to be kind of put into moving to a new lender. It is easier, but if you speak to a broker, they will assess the entire market, normally including your existing lender. So they'll be able to come back to you and say, look, your existing lender is offering you this rate, or we can get you this elsewhere, but it might be a little bit more work. Which one do you want to go down? And it's ultimately your choice. Some people want to save a little bit of time. Some people want to get the absolute best rate. So they're your 2 options. Now, on the assumption that you do remortgage to a new lender, let's say a new lender is offering the best possible rate, so we do decide that that's the best way to go. The process.
Process. You start with finding the application itself. You apply to your new lender, you go through a credit check, you go through affordability, which again the broker will do for you, and you have to physically apply to that lender. Once you've applied, or we've applied for you perhaps, you then go through underwriting.
So they'll assess your pay slips, they'll assess your documents, they'll do a credit check, the normal assessment that you would have had when you first applied for a mortgage when you bought.
They will complete evaluation. So again, similar, they might do that electronically nowadays, but they will still complete evaluation to see what the value of the property is now rather than what you bought it for. And then they'll issue that mortgage offer.
That's not, the valuation is normally free, but we'll jump into the fees in a second.
So the process to get from application to mortgage offer will look a little bit like what you did originally. It will look very similar
when
to
you
that,
first
when
bought
you
the property.
Yeah. Thanks, mate. From mortgage offer is probably, well, at least for me, where the biggest difference comes in. From mortgage offer, the legal work, if you're moving lenders, is is much less on a remortgage.
So you should explain that when you move lenders, you will need a solicitor, you will need legal work, but it's nowhere near as thorough as when you first purchased.
Or expensive, as we'll come on to. So the legal work, you can get the legal work sometimes wrapped up within a week or two on a remortgage. That can happen. Whereas on a purchase, as you probably experienced, it's often months. So that's the big, for me, the big difference in terms of ease or process is the legal work. The difference between when you bought and went through the mortgage and legal process versus the remortgage is that legal part.
And of course you don't have to go through all the kind of the negotiations and communication with the estate agent. So there's obviously there's no one else involved. So it's just you switching lender. Your broker will help you find the right mortgage. Your broker or the lender can normally recommend a solicitor to you. We'll give you the fees in a second, but it's probably going to be pretty low. So they're the main two parts of the process needed to organise a remortgage. Apply for the mortgage and instruct the solicitor to oversee the change of lenders. As far as the fees go, so we should stress that remortgaging can be very, very cheap. In terms of upfront costs, it can often be zero. It can often cost you nothing. Not every, but some brokers are fee-free, such as ourselves, so you will not pay us a penny. We'll just get a small percentage from the lender at the end of the process, which will not impact your rate. Most lenders will give a free remortgage valuation. So most of them, that will be zero as well. Sometimes to get the best interest rates, the lender may carry an arrangement fee, which we'll only recommend if the lower rate will actually save you money overall. But that can often be added to the loan. You can choose to pay it up front, but that could be added to the loan normally. So again, you don't have to pay that. And the solicitor's cost, so the remortgage solicitor, either the lender will cover the majority of those costs for you and they'll allocate a solicitor to you, or we as your broker can find your solicitor from our panel, and many lenders will give you cash back to cover the majority, if not all, of those legal costs. So the cost to remortgage is actually, in terms of fees, is normally very low, if not fee-free.
I think on the arrangement fee point that Dan mentioned there, obviously there may or may not be a fee, and I think this, quite a common talking point when people are remortgaging, possibly when you bought, is the lenders will always offer two different products. You'll get one with a bigger fee and a lower rate, and one with often no fee and a higher rate, and it will just depend on how big your mortgage is to see if it's worthwhile.
Yeah, which we can calculate for you.
Yeah, so a small mortgage, no fee; bigger mortgage, maybe a fee, but probably worthwhile, but not upfront, which was the main point we're making.
Yeah, and I guess a couple of points that I just want to cover. So the first one is when you remortgage, that is a good opportunity. If you want to make any changes to your mortgage, that's normally a good opportunity to do it. So if you want to borrow more, let's say for home improvements, providing that you meet affordability, that's a good time to do it. Keep it all kind of under one roof and it's all under one transaction with the same lender. Or if you want to change the mortgage term, if you want to either reduce it or if you really need to keep the payments down, extend it, that's probably one of the only times where you can actually materially change your mortgage term. In terms of there's a bit of confusion around mortgage scheme and mortgage term. So just to clarify, the scheme that we mentioned, so let's say a 2-year fix, which is coming to an end and you then need to remortgage, that's one thing. Your mortgage term, which is the total number of years that you've spread the entire mortgage over, that's very different. So you could take, when you first purchased the property, you may have taken out a 35-year term and just initially locked yourself into a 2-year fix at the start of that. So when you come to remortgage, if you just want a continuation of the mortgage term so that you're continuing to clear it down and at the end you'll be mortgage free, if you originally had a 35-year term and you've been on a 2-year fix which is coming to an end and you're now remortgaging, then you would often just continue. So the new application would be over a 33-year term. So you're not putting it back up to 35 years because otherwise you'll never pay your mortgage off. It's coming down with every time you remortgage. And then if you go for a 5-year fix, then when you come to remortgage next time, your term would then be 27 years. But you can reduce that. If you can afford higher payments and you want to clear it quicker, you can reduce the term moving forwards of the new remortgage application. I say it's quite a straightforward one. I mean, we could go into more detail, but that's quite...
Yeah. I think timing's probably the only thing. When would you start remortgaging?
That's a really good point, actually. I nearly forgot about that.
Timing would be 6 months from when you're your rate ends is when the window opens with nowadays, probably most lenders nowadays. Some are a bit shorter, but 6 months is around the time. So
because that's how long once you apply for the mortgage and they agree the mortgage offer is normally valid for that long. So as long as you complete within 6 months, it's normally okay with most lenders.
So generally, for our existing clients who have products coming to an end, we will normally try to get in touch maybe 6.5 months beforehand, touch base, have a chat with them and see what their plans are, and then try to get the ball rolling so something is secured. You can lock in a rate 6 months early.
Yeah.
You can then, through that 6 months, because of the lack of upfront fees, you can often change your mind if the rates change, if they come down, if you change from a 2-year fix to a 5-year fix or a tracker.
You're not committed to anything until the end of the process.
It'll be the day you switch lenders, and that is the day your current product ends. That's the day when you then commit to the new lender, when you actually legally move from one lender to another.
And I guess the reason we apply so much earlier, so like Kai says, if your mortgage is coming to an end at the end of June, then we would potentially start to look at the application at the start of January, 6 months in advance. There's 2 reasons for that. Number one, it's extra in case the remortgage process takes longer than expected. I mean, very rarely would it take that long, but you know, the lender has to run an application, the solicitor needs to do their legal work. If there's any hiccups that cause delays, you're giving yourself as much time as possible to get everything sorted in time, because if it's not sorted in time by the end of June, you will lapse onto the higher rate until it's sorted. So that's the first point. And the second point, which you did touch on, but just to go into a bit more detail, at time of filming, fixed rates are reducing, which we have touched on in a few of our other videos. So if you apply for a mortgage now at, let's say, I don't know, a rate of 4.8%, and again, don't hold us to that, you know, it will vary and things are changing depending on when you watch this video. But if you apply for 4.8% now, at the start of Feb, and in 4 or 5 months' time, just before you're about to complete, feel free to contact us, we can do a rate check and check to see if rates have reduced. If they have, we can normally switch you over to the lower rate. So by applying early, you're kind of giving yourself an insurance policy where you're locking in a rate, but if they come down, we can then switch you over to the lower rate. I don't know if I've trod on your toes there a little bit.
I finished my point. No, I didn't. No, I just mentioned this.
I think that's everything. As always, any questions or your remortgages coming up, give us a call. We can check affordability, see how many options you've got, see if we'll need to keep you with your new lender or move you to keep you with your existing lender or move you to a new one, and just generally give you advice to help you make the right decision. Thanks for watching, and we'll see you next time.